Okay, test, test. Well, you guys can't hear me, right? Alright, that may have done it. Can you guys hear me now? Not clear, yeah. Type. Still feedback, yeah, I know. I'm sorry, guys. That might have fixed it. Yeah, we're in. Now the noise is gone. Okay, now it's okay. Alright, well, we'll press on. Okay, so sorry guys, completely blown on this webcast. We just moved in Friday and Saturday this weekend. We've got boxes everywhere, new location, so this is going to be a complete disaster. But alright, so welcome guys. We're late, screwed up the opening, but it's going to take a while to get this set back up. We'll have this ready to go, full production quality for next week. So appreciate you bearing with me here to start. All right. The other thing is we're having construction going on downstairs, so you guys might be able to hear that. So let me go like this, cut over here. So yeah, all sorts of madness going on here in Saratoga, but it's great to be home. Really excited to be in the area where I grew up, and yeah. So just bear with us. But I think you guys can know that's kind of how I roll here. We just gotta do it on the fly. But we'll update you quickly on the markets here. I've got some positions working, some observations in the stock market. Our crypto team And look at this thing. This thing's out of focus. Unbelievable. Can't win today. So again, yeah, this place is in shambles. We got boxes and equipment everywhere, so just kind of getting set up here. So we got some positions going on here. We'll talk about that. I've got some Nasdaq positions. I want to talk to you about the portfolio that we're building. Talk about the cryptos. Obviously a really good move happening there in the cryptocurrencies. I still have a position on. I actually might cover some of that position with you today. So that's what I'm going to hit. Yeah, and Eric, are you my Eric from QBY? Robert says, where's the news desk? I don't even have a, you guys want to see how bad my office is? I don't care. Since I've completely screwed this up. Like, look at this office. Like, crap everywhere. So, here we go. So anyways, yeah, so we got all kinds of stuff going on here. This will be a temporary location. I'm gonna get an office downtown once Trish and the kids get settled in. And that's the other thing that's happened in our lives. We just had a new baby girl, Eden, November 1st. So I think you guys saw her on the last webinar. So it's just pure madness over here. And there's a ton of market volatility to sprinkle in, so fun times. Okay. Eric. That's awesome, man. That's awesome. Eric and I went to high school together. All right. So guys, here's the deal. From an Elliott wave point of view, there's two options. There's two ways that I see this market, okay? Is this a significant top or not? And that's the question from an Elliott wave point of view. For now, I'm going under the assumption that this is not a significant top yet. I'm going to allow for one more wave 5 move up here according to the Elliott wave theory before a serious sell-off happens. I don't think this is it. I could be wrong. I hope I'm wrong. But right now I'm positioned for that to not be the case. The wave count, the Elliott wave count that I'm following is, let me start all the way out here on the monthly. Something along these lines right here, okay? Let me in fact get down to the weekly. So the 5 wave move that I'm looking at here begins back in February 2016. We're looking at 1 and 2, 3, wave 4. A 4th wave correction will have similarities in terms of price and time to wave 2. Wave 2 was a running flat. It's actually an expanded flat. A net sideways correction, which makes for, according to the guideline of alternation, according to the Elliott wave theory, a more of a directional correction. That's why we're seeing the volatility that we are right now. So off the weekly, to get inside of that wave 4, here's what I'm looking at. I'm looking at something that could be an A, down, up in B, and then a drop down in C. If this correction is going to happen, you know, you're looking at support in the S&P anywhere from 25.55 down to 24.21. This still does allow for weakness, okay? I'm playing this count for now, all right? Now, there is another one, there is another interpretation that does say this is a significant market top, and we're going to get absolutely hammered, okay? And this is the interpretation here. It would be 1, 2, this is back from the credit crisis low. Here's your 5 wave move. We are now testing uptrend support in the S&P, and if you start to break through the 25.80 area, we're going to get absolutely destroyed. Okay, I'm looking at either situation. So from the weekly, let's get down to the daily. And you can see that, you know, we do have a 5 wave move on the way down. Okay, you do have a 5 wave move inside of orange 1, which that is the makings of a potential long-term sell-off. The problem I have right now with this interpretation for now is in the third wave position with yesterday's rally, the day before rally on the 26th. We're starting to set up, we'd have to do another 1-2. So you're looking at blue 1-2, and then inside of blue 3, you'd have to do even a smaller 1-2. So we're getting to the point where we're setting up for about 3 or 4 wave 3 declines, which that means just destruction. When I find that to be the case, you usually want to have an alternate in case we don't get this all-out collapse. I don't think it's going to happen right now, and I'll show you a couple reasons why that's the case. There's yet another one. There's another interpretation, okay? And listen, if you're new to the Elliott wave theory, it's easy to say, well, what good is it if there's multiple interpretations, there's multiple ways to look at the wave count? There must be fault in the methodology. And I would say no, because the analogy I like to use is when you go into battle, you always want to have multiple game plans. A general never goes into battle and says, this is the way the war is going to unfold. You always have plan A, and if plan A fails, you have contingency plan B, and if that doesn't happen, contingency C. So you have a plan going into a trade until you get punched in the face, right? And that's what Mike Tyson says. So I think the markets are the same way. That's why I actually love and embrace daily wave theory so much, because I'm prepared in either scenario. I just showed you 2 possible interpretations that are both bearish for about 2,500. Here's yet a third and a much simpler wave count. And I'm wondering if this might be the case. It could be we're looking at 3 down. This is a 3-wave decline, and yesterday's, the last 2 days of strength is starting to set up a C-wave rally. And that, I think, might be the situation. So as we get off, actually, you know what, let's stay on the daily. Let's look at this. I don't often use, rate of change, but this is just a simple rate of change indicator. We put a solid move down into October 11th. We kind of actually do make a new low here in the rate of change on this bar, which is on October 24th. But then, according to the rate of change, you start to see the momentum fall away. Price makes a new low here on October 29th, but ROC moves up off the low. And then we come into the next bout of volatility here in November. We come back close to a retest of the lows here, but you can see that rate of change is nowhere near where we were in the initial decline. Further, if you get off of the daily chart and into the half-day chart, that kind of looks like a 5-wave move up and a 3-wave decline. So we did initiate some long positions here, okay, and we're looking for a push up. The positions that we're in are actually in the Nasdaq, and let me just check. I'm just looking in comments. Here's what we're looking at in the Nasdaq. Here's the interpretation. Okay, so I'm looking at the blue count. So let me start from the left over here to the right. Okay, and that's always how I set up my charts. Biggest time frames on my left side of the screen to the smaller time frames on the right. Here's the equivalent count in the Nasdaq. I'm wondering if we are in a 4th wave decline despite all the crazy sell-off that we've seen in technology. Amazon, Apple, Facebook, just getting hammered. Google's even really taking it on the chin here. Microsoft is holding in, Intel's holding in, Cisco's holding in. Old school technology is actually doing a lot of the heavy lifting here. So if this count is accurate from 2015, we're doing blue, green 1-2, beautiful wave 3, and we're doing a 4th. Let's get inside of this 4th wave. And just to give you the detail, there's green 3. All right, so the triangle occurred back here in May of 2018. We moved up, we dropped down. So there's the weekly. Here's the daily inside of green 4. Now here's what I'm seeing again. It's really hard to count the Nasdaq, and this is what's mind-blowing to me. Despite the destruction that we're seeing in FANG, it's really hard to count this as a impulsive decline. meaning 5 waves, and I'll show you on my other wave count. It really, for me, looks like 3 down, 3 up, and 3 down. 3-wave movements do not indicate trend change. 3-wave movements counter to the primary trend are just simply corrections. So again, as much as I want to be bearish, as much as I want to see this market get hammered because of all the insane monetary policy that's been put in front of this market to jam interest rates to the floor and force everyone into the stock market, that needs to be unwound, and those policymakers need to be exposed in terms of just terrible procedures that they put in to support the falling economy. But whatever, I digress. If you're trying to put a bearish count on this, the only one that I can see is 1 A, B, C running flat, and then we're doing another 1, 2. It'd have to be yet another 1, 2. So unless we're setting up for a third of a third of a third decline into the end of the year, that takes you, 1,000 Nasdaq points lower. Unless that's the case, I think it's better to start looking at this as a correction. The other thing that I wanted to bring your attention to is look at the RSI. Similar to the rate of change, momentum, RSI, they're all very similar. I've been pointing this out with my members, and I'm not usually a huge indicator guy, but I thought this was pretty helpful. So this is the Nasdaq daily, as we've been discussing. Good sell-off there in October. Big, healthy, negative RSI reading. A lot of momentum in that initial move. Okay, we go down, make a new low. What does RSI do? Make a higher low. Okay, momentum is not as strong in this new low in price as it was at this price. Okay, and yet it just continues to a third higher low as price continues to make yet a new low a couple days ago. So you had 3 lower lows in price and 2 non-confirmations in relative strength. And all that is, guys, as you know, if you throw a ball in the air, it's going to ascend at a certain rate, but as the ball continues to get higher and higher in the air, the rate of change or the speed at which it's ascending will decrease, at which point it'll reach the apex, and then it'll start to negatively start to drop. So that's kind of the same thing. We're falling, but at a slowing rate, and eventually shorts will start to get a little nervous, come in and look for a squeeze higher. So this is what I'm seeing, and we are positioned in the Nasdaq for this move. And I'll show you the trade that we're in right now. I've been lightly trading because, again, we just had a baby. You have a move, it's not a good idea to trade around big life events, but why not? We're doing it live. so here's the trade that I have on with our subscribers. It's in the 14 December. Options. This is the Nasdaq. We did offer the equivalent position in the QQQ if you don't have the account size to trade this. So what we did is we bought a 6950 7,000 call spread. So you're buying the 6950 calls, selling the 7,000 calls, but you're selling double, right? You're buying 3 at 69.50, selling 6 at 7,000, and then buying another 3 at 70.25. Essentially, what you're doing is you're buying. That's just a butterfly. But what you're doing is you're buying a call debit spread, and then you're layering that with a call credit spread. So we have an objective where we think the market's going to go, which is the body of the butterfly, which is 7,000. So we think the market's going to move up towards 7,000 in the middle part of December. But we don't think it's going to explode higher into the end of the year. So in order to finance a purchase of that 69.50, 7,000 call debit spread, we did it 3 times. We sold a 7,000 70.25 call credit spread. So you take in a credit by doing that call credit spread. That's just a butterfly. So we're trying to get up towards around this 7,000 mark over the next couple days to a week. If we continue higher towards 7,200, it's okay because we did this as a broken wing, okay? Which means there's 50 points below the body of the butterfly at 7,000, and there's 25 points above on the upper wing. So the lower wing is 50 points below, the upper wing is 25 points above. When you buy a closer call on the upside, you bring in more positive delta. More positive delta. And that's what gives us the max potential risk up here. On a normal butterfly, if there are 50 points on either side, you could have losses on the downside and on the upside if it goes too far. This one is structured such that ideal price would be $7,000. I'd make $12,644 on December 14th if we get the perfect pin. Really hard to do. You know, you're trying to get anywhere from 8,000 to 10,000, 9,000, something like that. Okay, and if the market explodes higher, I'll have a gain of $5,700. So that's all. That's really what I'm looking to do. Terry, who works with us, who does a great job, and there, he said it looks like a W formation. Which one are you talking about, Terry? On Nasdaq or S&P? And I'll be bringing the team in as I get more and more comfortable with this software. I have guests. I figured out how to do guests, so we're going to do this. This is still like beta. You know, this is still in beta. So again, I'm just kind of getting comfortable with the software, and then of course I had to rip my whole office up and set it up here. So don't give up. This is just strictly just having fun, experimenting to see what's capable, and then we're going to really ramp production quality up here as I get routine in my life. So all right. So the other things I wanted to talk about here, you know, a couple sectors, industry groups that I think are looking good. The semis. You know, the semis have really gotten hammered, and this is something that I've talked about on Fast Money on CNBC quite a bit. The chips have been semiconductors have been a major source of weakness in the Nasdaq, and if you look at prior declines since 2009, the 2011 decline was 29%. The 2015 decline was 27%. This decline so far is like 21% or 24%. You see that right there? It says minus 24.09. This one's only 24%. Okay, so this is actually inside of the prior decline. So it's kind of hard to say. You know, chips have been non-confirming throughout early 2018, and then they really sold off with Micron and Nvidia, and some of these chips really getting hammered. But it's not a bigger decline than what we've seen throughout the entirety of this rally. So it's hard to get super bullish on the chips when we haven't even met the symmetrical declines we've seen in two prior occasions. You combine that with the wave count off the weekly. Let's get to the daily. Same kind of 1-2 in early 2016. I'm wondering if we did some kind of ABC. We're doing a 1-2 ABC correction complete here in 4. We just did a big 3-wave drop, and we're starting to move up. Okay. For me on the daily, that looks like just a big ABC. We tried to get into the 786 retracement. We gapped down. We closed above it on November 20th, and then we're starting to lift off. So I think the semis look good. Another ETF that I've been watching that has been a pretty good source of stress for the Nasdaq is the social media stocks, SOCL. You look at this, it's kind of hard to be bearish this. In fact, it looks pretty good. So from 2013, you're talking about 1, 2, and then inside of orange 3, there's a beautiful 5-wave move. And if you just look at the kind of the orderly decline within this channel, I haven't looked at it, but I can almost guarantee you're going to get momentum divergence, as I mentioned in the Nasdaq. Let's see if I'm right. So we had a low reading here on the 22nd, and this new low on the 18th has not confirmed with a new low. So you're starting to get some divergence on the weekly. Let's see if we're getting it on the daily as well. Oh, massively. So the momentum reading was the low on the 9th, new low in price, not confirmed by RSI. new low in price, yet a higher low. So if SOCL, which, you know, there's Facebook in there, there's Twitter, there's Tencent, which is a Chinese social media, and a lot of those guys have come under pressure. So that guy's looking pretty good on the top side. So we'll keep an eye on that. AMD is a holding of mine in our portfolio, which we'll talk about here in a second, but I'm liking the looks of this. It looks like ABC down. We're looking at 1, 2. This is a rather aggressive count. I'm not sure if it's gonna withstand, but the takeaway is still this 3-wave corrective rally into fib support. And if you start to move above 22, I'm actually going to add to our position in AMD. Some stocks that have been acting really well. Twilio is another holding that I really like. TWLO, just a nice ABC decline. As I mentioned, Intel showing really good relative strength. Cisco showing good relative strength. Microsoft eclipsed the market cap of Intel, or of Apple, I should say, which is quite amazing. But then you get stocks like Amazon and Apple that just really are struggling to find lows. So that continues to be a problem. Apple, I don't have much for you, to be honest. What I do want to show you here is some more generic charts. Not Elliott wave, but just old simple moving averages and Bollinger Bands. I'm a little concerned here. This is the weekly. We broke through the 50-week moving average, which was really good support. Once, twice, 3, 4. We just broke through that. So the 5th test of the 50-week EMA didn't hold. I'm a little concerned we might have a test of the 200-week moving average at 147. So that'd be another $30 drop. It's going to be hard for the Nasdaq to withstand that, if that is in fact the case. The other issue here is the 50-month moving average is at 144, and that thing has been very significant. Look at the green moving average, big test there, big test there, big test there, and here we go again. So if this Nasdaq trade that I'm talking about falls apart, I think Apple's got a good shot to move down towards that 144 area. All right. Okay, let me just check my notes that I had here. We'll take a quick commercial break. No, I'm just kidding. I don't have any commercials set up yet, but we will. We'll have commercials. Let me just check these notes that I had set up for you here, and we're going to move over to, oh yeah, here's another one that I'm looking at is healthcare. And if you look at some of the sector SPDRs, XLV looks solid. It's being led by some of the big cap pharma like Pfizer. Where's XLV? Even Amgen looks good. Merck looks good. So some of the big cap tech, big cap pharma looks strong. So XLV healthcare ETF, ABC down, A. We came to a higher low, had a nice strong close yesterday, and it looks like we might have a C wave move up towards at least 96.34. So XLV is looking good on the top side. So that's one we want to keep an eye on. Okay. International markets. If you look at the DAX, German DAX, longer term, for me, it's kind of hard to be bearish this one right here. So this is the German DAX on the weekly from 2016. You're looking at 1, 2. You can see a beautiful wave 3 that easily subdivides into 5 smaller waves. Okay, and this wave 3 even subdivides into 5 smaller waves. A really nice count there. And then we went into, I think, an A, triangle B, down, and C. So despite the concerns in Europe, the biggest stock market in Europe is showing support well above 11,000. So we just did a double bottom in the DAX. Looks like we did a little bit of a, we're doing kind of a indecision day here, but if you start to get 11.6, 11.7 in the DAX, I think we're going to continue to actually push higher. Looking at the Nikkei, you're going to see a similar story. In fact, you look at the Nikkei and you see strength. It's really hard to want to be bearish this market. We just did come off a double top, but we also just did a double bottom. So if you start to get above 22,006, you should be able to retest those highs at 24.3. Okay, so international markets are, Germany, Nikkei looks decent, even Hong Kong. It got, this correction in Hong Kong got very deep. This is the Hang Seng, but we didn't hit invalidation, which would have been 24,450, and we just got a poke above this recent consolidation. You see that bar right there? Let me get the fib out of the way. We just got a pretty strong close above that range. So maybe even China coming back. So for all of those reasons that I just mentioned, that's why I'm building the longer term portfolio. Now we got 3 minutes ahead of the open. Let me just talk to you about that quickly. I trade 2 accounts with our customers. I trade my active account, which is right here. Looks like I'm giving back 1/3 of my gains on the Bitcoin short, which I'll talk about. And then the other account that I just opened, I trade my IRA as well. This is a new project I'm doing with our members. I funded a $100,000 account, live capital, and I'm building a portfolio. And we're doing it live in front of our members to show you how an active trader manages a portfolio. Right now I have, how much capital? Right now I have about $33,000 of my $100,000 allocated. I have $67,000 in cash available, and I'm going to be deploying and building positions, moving in and out. So that's something we're going to be doing live. We're not going to be actively option trading it. We're going to be building positions. Maybe we'll do some covered calls. I don't think we'll do any cash secured puts, but some covered writes, bring in some income and high volatility, but building a position. Okay, building a portfolio, I should say. So that's that. If you're interested, be sure to check us out there if you're not so much of an active trader. The other thing that I'm doing, and I'll finish up with this, my guy Alex, who runs our crypto service, has been great. Chase credit card. Hope there's no fraud on my card. All right, so I'm short Bitcoin as well, and let's just talk about that. As soon as we get the technology rolling, we will bring Alex in to do an interview. He runs all of our crypto analysis, and he's done a great job keeping me short. It looks like we're moving back above. Alex, are you still here? I'm going to ask him if I should cover the shorts, and I'll do those shout outs for sure. All right, so market's now open, which is fine. Here's where we're at in the Bitcoin. We're already back at 42.20, and I think, I don't know if Alex is still here. Alex probably took off, which is fine. But looking at Alex's count, we use Motive Wave here, and I basically, as a customer, just like you, if you have Motive Wave, you can sync your analysis to ours through our program. So whenever we make an Elliott wave change, your charts are automatically updated. It's an unbelievable program. So here's Bitcoin getting absolutely destroyed. I've been short for a long time, and it looks like I'm actually going to take some profits. I've given back 1/3 of the profits that I have in the trade, which is fine. I'm totally willing to do that. I believe this is our primary account, and Terry's here. Terry, this is what we're working, right? You and Alex, this is the primary account. The decline has been nasty. But I'm thinking it's A, triangle B, down in C. We just tested this fib support at 34, 31.8, and 31.5, and we're already up at 42.2. So we've come ripping back, and that's okay. I'm not going to cover everything because as I get down here to the 3-hour chart, in fact, let me go back to the daily and do it sequentially. We're looking at A, big triangle B, and then a potentially 5-wave move down in C. Looks like we don't have completion yet. So off of the daily. Okay, we're gonna have resistance in a 4,500. All right, we're looking for another decline. I don't know if we're gonna get it. The market's acting well, and I know we're constructive on XRP, which is Ripple, which is one of the few cryptos that have real utility right now. So Ripple, I know, looks good. We're looking on the long side there. So I think I'm just going to take some profits on half of my XBT. Giving back 1,000. I'm still up 2,800 bucks on it. Okay, Terry says orange, so all right, I'm gonna take half and filled. Okay, so made a good 3,000. Was up 4,000 on that trade, and yeah, we're good. All right, now we just did a big Black Friday, Cyber Monday, Flash Crash Friday sale, and we have some brand new members. We're gonna give them shout outs here. Calvin, I don't know if we should say last names. Probably not, right, Terry? I'm sure they want that as secure. I'm not gonna do last names in case anybody's wanted. Calvin R, Alex J, Troy K, Martin, John D, Pritesh P, Brian L, Premnith V, Michael W. Looks like you already asked. I think my team was ahead of it. They put the last names and the initials for people who want to stay anonymous. But Calvin Russell in the house, Steve J, Bob F, David K, Edward J, David D, Marcus W, Jack Y, Majalefa S, Sohail R, Naresh M, Jeff B, Glenn M, Peter S, Douglas K, Harold Z. Welcome, guys. Those guys all upgraded to the annual subscription here at Trading Analysis. Our Black Friday sale was huge. It was really, and Cyber Monday was amazing. So a lot of people joined the team. If you haven't yet, please consider joining us. I promise we're much more organized than I appeared at the beginning. Cut me some slack. We just moved in here. I got to get my technology and everything set up. I'm moving to a cool office downtown Saratoga. Lots of space. Can have a studio. We're going to make this a real deal. So again, just a beta. Hope that helps, guys. Just give you some color on the markets, and I wish you a great back half of the week. Okay? Thanks, and we'll talk to you guys soon.